Good evening, everyone. Welcome to the channel. Today I am going to talk about Wasion Holdings interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Wasion Holdings Limited offers a diverse range of businesses and services across the energy sector. These include energy metering solutions, smart meters, ultrasonic calorimeters, and power quality monitoring devices, energy efficiency management solutions, measurement automation systems, application systems, and energy data mining network infrastructure, network interface modules, data concentrator units, communication modules, RF gateways, and LoRaWAN gateway systems software solutions, utilities customer information, universal device integration, meter data reading, prepayment vending management, and smart network management systems, renewable energy storage application products, high-voltage electrical equipment, automatic reclosers, fault detectors, vacuum circuit breakers, gas-insulated ring main units, and metal-clad switchgears, data collection terminals, and electronic components trading energy data services, load management, user management, and energy data integration. The stock price of Wasion Holdings has skyrocketed by over 105.97% in the past year, driven by a combination of factors. The company's robust financial performance, with significant increases in profit and revenue, has been a major contributor to its success. Notably, Wasion reported a 35% jump in attributable profit and a 20% increase in revenue for 2024. The company's strategic international expansion and new partnerships have also played a crucial role in its growth. The establishment of new factories in Indonesia and Malaysia, as well as the opening of a factory in Hungary, has expanded Wasion's global footprint. Additionally, the company secured numerous significant contracts with major players such as State Grid and Southern Grid. The positive market sentiment and analyst outlook have also contributed to the surge in Wasion Holdings' stock price. Analysts expect the company's international expansion and digitalization to unlock its global potential, driving further growth and outperformance in the market. Overall, the combination of strong financial performance, strategic partnerships, and international expansion has driven the significant increase in Wasion Holdings' stock price over the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Firstly, the expansion of advanced smart metering business and high-end metering products market share have contributed significantly to revenue growth. Additionally, increasing demand for energy efficiency management solutions and growing adoption of IoT technology in energy management have also driven revenue growth. Furthermore, listing on Star Market and inclusion in Star 50 Index has provided a boost to the company's reputation and credibility, leading to increased orders from provincial power grid companies and local power utilities. The expansion of manufacturing capacity in Indonesia and Malaysia, as well as successful collaborations with key clients and partners, have also contributed to revenue growth. In contrast, some drivers of potential decline include fluctuations in demand for certain products or services, changes in market trends, and competition from other companies. However, the company's growing presence in Latin American markets, communication segment growth, and power and fluid advanced metering infrastructure segment growth suggest a strong foundation for continued revenue growth. Net income and profit margins. A year of contrasting trends, the company's net income experienced a significant increase of 33% from RMB 331,030 to RMB 439,649. This upward trend is consistent with the YoY growth rate mentioned in another section. However, profit margins tell a more complex story. Gross profit margin declined by 0.36 percentage points to 35.13%, while operating profit margin remained unchanged at 17%. On the other hand, net profit margin saw an increase from 8.8% to 10%. The decrease in gross profit margin can be attributed to factors such as declining national procurement prices and equalization of state grids tenders. In contrast, the growth in net profit margin is largely due to investments in digitalization, although specific details are not provided. Overall, these mixed trends highlight the company's efforts to balance short-term challenges with long-term strategic initiatives. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash inflow of RMB 251,931 from operating activities, it is clear that the business is producing sufficient profits to cover its expenses and generate excess funds. This positive operating cash flow is a key indicator of a company's financial health and stability, suggesting that the organization is well-positioned for future growth and success. The company's debt level and interest expenses have undergone significant changes. Notably, the gearing ratio has decreased from 21% in 2024 to 17% in 2025, indicating a reduction in debt levels. However, interest-bearing bank borrowings have increased, rising from RMB 587.2 million to RMB 660.67 million. In terms of interest expenses, the company has seen a decrease, dropping from RMB 62.69 million to RMB 59.3 million. Additionally, interest income on financial assets at fair value through profit or loss has decreased by 61%, and interests on borrowings have decreased by 6%. These changes suggest that while debt levels are being managed, the company is still incurring significant interest expenses. Management is optimistic about the company's future prospects. The key areas of focus include technological innovation in AI, VR/AR, and big data to drive growth. The Power AMI business is expected to expand significantly from 2025 onwards, while government policies such as the dual carbon strategy will support green power development. The company aims to establish a multi-energy IoT platform and deepen ties with key clients in overseas markets. Overall, management is positioning the company for long-term success through strategic investments and market expansion. The company has a history of paying dividends to its shareholders. Specifically, it distributed HK 38 cents per ordinary share in the first half of 2025 and HK 28 cents per ordinary share in the same period of 2024. This indicates that the company prioritizes returning value to its investors through dividend payments. Inventory buildup and supply chain disruption concerns. A review of the financial summary reveals mixed signals regarding inventory buildup or supply chain disruption. On one hand, the inventory turnover period has shown a slight improvement from last year, indicating some level of efficiency in managing stock levels. However, there are also signs of potential issues. The data shows that while certain products, such as smart power meters, have seen an increase in inventory levels, others like communication terminals and smart power distribution devices have experienced decreases. This disparity raises concerns about the overall supply chain management and whether it can handle fluctuations in demand or production capacity. That concludes the financial summary for Wasion Holdings. Feel free to comment below, and I will be happy to answer them when possible.